Hello everyone, welcome back to Upside Down Data. Today I want to talk about a new risk indicator we just launched for Enjin Coin and its native token ENJ. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter where we put out regular updates about our risk indicators and more. So if you're returning to the channel, you've seen these types of graphs very often. What I'm showing you here is the price history of ENJ over time. The price is plotted in logarithmic form here on the y-axis, and each dot represents a day, and each day is color-coded based on the output of our risk indicator, the upside-downside potential indicator, or UDPI. A score of 5 means high risk. That's when the upside potential is quite low, downside potential is quite high. Score of -5 is the opposite. That is when the downside potential is quite low and the upside potential is quite high. And when you just look at this chart, what you can see is that the UDPI does a great job of identifying when Enjin has been a little bit maybe overheated and where a correction is likely to follow off of that. So kind of these high risk zones, these tops, as well as these bottoms, these low risk zones that have presented historically great buying opportunities that have tended to precede big moves to the upside for ENJ. And so what we can see is that the UDPI also was able to call that in more recent history as well, which of course is useful. You know, it's not really that useful to look all the way back in the past. What's it doing right now? That's really what we care about. And you can see that the UDPI was able to call the summer as being an especially good time to be investing in ENJ. And then I think even more interestingly, after we had this kind of correction in August, kind of off of this initial run out of the summer, the UDPI also called this point down here as being a relatively low risk, and that preceded this big rally that we've seen ENJ put in over the recent weeks. You know, it's about a 2.5x move or more, you know, coming up out of here, a pretty big move to the upside. And the UDPI was able to call that. It was able to say this is a relatively low risk time to be acquiring ENJ, and then sure enough, off to the races we went. And now we're kind of consolidating at this higher price point. Of course, part of that's probably also contributed to by the fact that the crypto market broadly right now, as I record, is kind of in a bit of a slump. You know, Bitcoin's pulled back a good amount from its all-time high, and so that's kind of been pulling back the rest of the market. But still, this is a pretty impressive move that Enjin was able to put in when a lot of other altcoins were kind of just consolidating or even correcting during that time. And that probably goes into the fact that, you know, metaverse tokens, gaming tokens have been doing quite well recently. There's a lot of interest and money that's been flowing in those directions. So Enjin, ENJ has probably been profiting on that. It's probably been benefiting from that increased sentiment in that space. So to talk a little bit more about where we are currently, I think it's useful to look at this graph of the UDPI output. So what I'm showing you here is just the output of the UDPI over time. So on the y-axis here, we have the risk level, so 5 high risk, -5 low risk. And this is just what the model output was across time. So you can see that coming into the spring of 2021, we had this huge rally, this huge move to the upside that then ended up peaking out at these really high levels of risk. And then we moved into the summer, where the UDPI identified that as actually being a very low risk time to acquiring ENJ, before we made a rally into August, where the UDPI spiked back up, came back down, and then we actually had that next big move to the upside that we've just seen recently. Now, something I think is useful about the UDPI, and we talked about this on the channel before, but I think it bears repeating here, is the fact that the UDPI really lets you cut through the emotion and the fear in these sell-offs and really identify what's the data actually say. Is the asset actually high risk or low risk? Is it likely to keep falling further, or is it like that unlikely? And what you can see just by looking at this chart very clearly is that, for example, during the summer, when everyone was extremely bearish in the crypto space, the UDPI was able to say, well, why? For an asset like ENJ, you look at this chart and you say, well, it's almost tapped out at the bottom there. You know, it's at almost the lowest levels of risk. Why should we be afraid right now? We should actually be happy. We should be thinking of this as an opportunity, because it seems like upside is probably more likely in the future than downside given this extremely low risk level. And that's exactly what we saw. You know, coming out of July of this year, we had that huge rally into August for ENJ, had a bit of a correction into September, and then off to the races it went again more recently, and we just saw that huge appreciation. And the UDPI has been reflecting that, right? The risk level updated based on that rally out of the summer, then updated based on that correction that we saw out of that rally, and then again here in this new rally that we've seen, it's now shot up a little bit above 1. And something that we talk about also on this channel, I think ENJ gives a great example of how this could have been useful very recently, within the last 3 weeks, is the idea of using multiple different risk indicators in collaboration with each other. So instead of just looking at the indicator for ENJ to decide if it's high or low risk, or if it's a good time to maybe be entering or exiting the ENJ market, what you can do with multiple risk indicators is actually use them in conjunction to see if you should take profits maybe off of one asset that's overheated, and then put those profits maybe into another asset that might be low risk at that point in time. And I think a good example of that recently is if we compare the ENJ UDPI with the Cosmos or Atom UDPI. So what I've done is I've just lined up these graphs in time. So Atom has a shorter price history, so that's why this graph is shorter than this one. But these are lined up approximately 1-to-1 on the days. And what I want to draw your attention to is this point in time right here. So you can see is that Atom had a big rally coming out of the summer, and it actually ended up then going ahead and peaking in late September, all the way up to kind of the highest levels of risk here, all the way at the top here. And what's useful to see is that imagine that you had a Cosmos position, let's say you rode this up, this was about a 5x move or so, approximately 5x move out of the summer that Atom was able to put in. If you had an Atom position and you got up here, most likely if you're looking at this UDPI level, you'd say, all right, might be time to be taking profits here. It's unlikely for Atom to be able to continue on its merry way. It's unlikely for this rally to be able to continue. And then if you were just looking at other assets in the crypto space of where to move those profits, one that might have stood out at the time is ENJ. ENJ was down at around -2 at that point, and the risk level was actually falling still at that point. And so if you're taking profits out of Atom and you're looking for somewhere else to go, ENJ actually looked like a pretty decent place to put those profits. So if you just rode a 5x move here, then you have 5 times your original Atom position. Maybe you put that all in ENJ. And what would have happened if you had done that? What would have happened if you had actually executed on that strategy? Let's say that you would have made that decision. What would have happened? Well, I think we can see what would have happened if we look at the price history. So here I just have some screen grabs from TradingView showing the price history of ENJ here on the left, and then Atom here on the right. And I've selected the day at which Atom peaked. This was the day in which Atom showed a max level on the UDPI, super high risk. And this is where ENJ was showing about a -2 around there on the UDPI. And so what you can see is that if you had taken profits off of here, after riding this about 5x move out of the summer, or even more potentially, and take those profits, move them over here, you would have gotten in right around here at this kind of local low that ENJ had put in after this run that it put in into August out of the summer. And it turns out that ENJ went ahead and put in over a 2.5 move to the upside from here up to here after that. So what would have happened basically if you would have seen that Atom was at super high levels of risk, that ENJ was at relatively low risk, taken those profits from Atom, moved them into ENJ, you would have taken that 5x profit roundabout, and then you could have multiplied that by another 2.5 coming out of this. And so that's how you can really use these multiple risk indicators to really compound your profits. You're not necessarily locked into profits just that one asset's able to put in. You can take profits from one asset, look at what other ones might be lower risk at the time, move your profits over there, then ride moves of that other asset up into the future. And again, this whole thing played out not long ago, right? This is only a month and a half ago, a little more, that this opportunity would have presented itself, and then it would have been executed. And what we think is likely to happen as this bull market continues, and here at Upside Down Data, we do think we're in a bull market that's likely to continue. That's our thesis. The idea is that these kind of opportunities are likely to reemerge. That it's likely to be the case that certain assets are going to run at different times, and then if you have a position in one asset that does run and go up to those high levels of risk, then the idea is that you might be able to take profits from those high levels of risk, high risk assets, moving them to lower risk assets, then ride those profits up as well. So this isn't financial advice. You should form your own strategies and your own opinions of how you want to navigate the market. But that's just something that we are thinking a lot about here at Upside Down Data, the utility of multiple risk indicators and how you can move profits from one to the other to compound your profits. Take a 5x move that Atom put in, for example. Imagine you got an Atom position, and then compounding that by another 2.5x at the end of the day. That's a way that you can really start stacking those gains on top of each other instead of just relying on one asset, then maybe exiting, re-entering, and things that are maybe less take longer and we might not be able to ride as high profits into the future. So to talk a little bit more about where ENJ is today, this is where the risk level is right now. So it's at 1.56. And so what that suggests is that ENJ is a little bit overheated. It's not insanely overheated. You know, we're not at these super high levels of risk. We're not at, 4, 3, 5, anything like that. But it is getting a little bit higher up there. And so what this suggests is that the downside potential is greater than the upside potential. And this doesn't mean that Enjin can't go on another run, right? Having a risk level of 1.56 does not at all say that there's no more room to move to the upside. There's plenty of room to move to the upside if Enjin wants to. But what it's suggesting is that there is still more downside potential there. So it's not as nearly as favorable of an entrance potentially as it was back in those green zones that we saw on the earlier charts at those lower levels of risk. It's a little bit higher. So the risk-reward ratio isn't quite as favorable now as it had been back then. Not to say that Enjin can't keep running. It certainly can. It's just saying that it's not nearly as favorable of an entrance point potentially as it was just a little bit ago. And we can compare that to the risk levels across kind of the crypto space. And so what I'm showing you here is the UDPIs for a bunch of different assets that we've created UDPIs for. We're up to 17. We're adding more indicators every week. So if you want to stay apprised with those, make sure to follow us here on YouTube, follow us on Twitter, where we'll be putting out updates as we create new indicators and also updating existing indicators, giving updates about existing indicators that we already have. And so if you compare Enjin to other assets in the crypto space, you can see that's a little bit kind of up there in the higher end with some of these other ones that are up above 1. It's not as high as DOT. DOT's one that we've been following for a while. That seems to be particularly maybe extended and a little bit higher risk than some of the other ones. And then certainly ENJ is not in a position like some of the other ones like ADA or XRP or Algo, which are kind of sitting in those negative levels, or Atom even itself. Interestingly, it seems like ENJ and Atom are kind of switching places right now. So it'll be interesting to watch that to see if we might get to a similar place where a move back between them might be useful. And again, this doesn't mean that Enjin can't run or that this is even a good idea right now to take profits off of ENJ and put them into Atom. It's just interesting to see those flipping, and something that I personally just look for when I look at these is, if I have a position in an asset, is it overheating? If it is, I might then look at which ones seem lower risk that might present opportunities to compound the profits. So again, not financial advice. You should form your own strategies and your own opinions about these things. But that's just some of the things that we look for here at Upside Down Data. Alright, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And remember, with the UDPI, we're all going to make it.